Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for stopping by. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, a chassis in the intraday developing time frame. This is about the business of trading. Also, the TraderLab community is open to everyone at no cost. If you're interested in understanding this business and separating our fantasy from what it actually is, and when we come into this business, this is like landing on a different planet. It is an alien environment, and for all of us, and I think I can speak for all of us, when we come in here, we have nothing. We can't relate to the business because we're in a random environment. So our nature, psychologically, is to try to create predictability and certainty and squeeze risk out. All of that is driven by primal wiring and not the actual business model. So we need to differentiate between our psychological needs, which are primal, in other words, avoid risk, create certainty, and when you're in an environment that's 100% random 100% of the time, and you have no control over other inputs or other participant behavior, the only control you actually get is over your behavior. So in the TraderLab, it's about vetting a trade plan, which is the area you can control. Your control stops after you push the button and put the trade on. So the elements to control are your plan that has a statistical edge with a random distribution of outcomes, and of course controlling yourself. Now, one thing that's really important among many elements is most developing traders put all of their energy into setups, prediction, chats, the only one trade you need, all of this fantasy. And I understand because we've all done it in one way or the other, whether it's reading a book, going to a chat room, influencers, YouTube world, who knows, right? And you all know what I'm talking about. We all want somebody else to hand us the checkbook. So all we have to do is do a plug and play. It would be nice. Unfortunately, that is not sustainable, and I think the failure rate among developing retail traders who do that speaks for itself. So I don't have to speak further about it, but one of the things you will find is in a random environment, we all have winning trades. And I always think of that as the problem, not the solution. And you're going to go, wait, we want more winning trades. And I'm going to say, of course we do. But you know what we actually need? It's not the winning trades, because they're going to happen even if you throw a dart at the wall or randomly hit buy, sell. You're still going to have winning trades, right? What does that tell you? It tells you it isn't the winning trades that we need. What we need is a plan that has a statistical edge. And instead of this emotional attachment to outcomes, in other words, was I right or was I wrong? What is right? Well, I attempt to answer this and share my experience with you in the TraderLab as well as the other traders in TraderLab. And what is right is having an edge that you execute. In other words, a plan with a statistical edge. And instead of right-wrong, the right is executing the plan with the edge. That's where it's right-wrong or error, not the outcome of the trade. So we're all hung up on outcome, but the outcome is the result of the edge in a random distribution. I hope that makes sense. And the model really is gaming, casinos. How do they work? They only play games with that. So that's the basis of this business. Now, if you're visiting, I just want to make you aware that in the TraderLab, there are 60 PDFs of structured trades. There's a library of webinars as well as a document section. These are just some ideas that I threw together a number of years ago. These are actual trades, and there's a bunch of research in here. I was working with Bookmap developers on some things, and so what's down here is not really relevant. What is important is you reverse engineer ideas. There is no plug and play in trading, otherwise we all would have done it, and you would have moved 2 ATMs in your basement because one wouldn't be sufficient. So how's that going for you? If it's not going for you so well, then maybe you should visit the TraderLab. Remember, if you keep waking up in the same place with random winners, I call that Trader Groundhog Day. It's what I did because I had the winners, and I said, well, all I got to do is make this better. Well, I didn't make it better. It was the same. But I didn't understand that. And I spent years trying to solve it because I always had the winning trades, you see. So I didn't understand early on because when I started in 1980, really, it was all floor traders. All my buddies were floor traders. So all I'm saying is you guys, you have more information than I ever had. There was no internet, no PCs. But that's a problem as well as me having no information. We both have the same issue at different times. And you might even think of it as polarity, two extremes. Me, no information. You, too much information. So we both had a problem. I solved it for myself, and I share that in TraderLab. And it doesn't mean it'll solve for you. What it means is if you're waking up in Trader Groundhog Day, work hard, get the same results, then it's not you, it's your process. So your beliefs about the business are the thing you might have to change. It isn't probably what you imagine it to be. It's not a video game. It is a business. So let's approach it like a business. And again, thanks for visiting TraderLab today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. Every stream builds on top of itself. If you want to know how we got here today, then you need to watch the last two streams. Everything builds. And this is where continuity and an understanding of what's happening in the market comes from. So get your pen and paper, review these streams. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. I would love to get into real time, but if you want to see this in real time and you're visiting in YouTube, use the link down there. You can visit TraderLab. There's no cost for it. In that library of webinars, there are streams up to 4.5 hours long of real-time narration. So think about that. So let's go take a look at the higher time frame, and then let's get into it. And if you have questions and you're visiting in YouTube, please post. I'll do my best. If I can't get back to you, always feel free to come to TraderLab. Now, I'm only going to spend a bit on this. If you remember in the streams, this was kind of the over-under. If we couldn't get back above here, for swing traders, this setup is short. For option traders who are, positioning, or if you're trading ETFs or any other product, and this process I'm sharing with you works in all time frames, swing trading, whatever, anything that you want. Basically, if you understand this process, you can just change your time frame to operate. And this works across all asset classes, but you have to vet it because every asset has its own nuance, like NQ is a bit different. So ARC oil, but it's all the same. So let's look. If that's too high, let's talk about market mechanics very quickly. If we come out, and this is really very important level right here also. So we have this is too high, and we had our support in here. So how does the market work? Well, if it goes up, we have longs in here, right? Going to the moon, Alice. If that's too high, who become the sellers? The longs. There they go. Nice. Having a great time. All right. Then we gap down here. What is the condition of the market? It's short. Now we come across and squeeze out the weak shorts. You'll see how this works. And it's very important that you understand market mechanics. The market typically doesn't just run in a straight line. It can. It can do anything. Remember, random. But most of the time, there is a sense of behavior that replicates over and over. And the way it works is if the market gets short, what happens? There's buy stops above the sellers in here. And now I got my longs here. I get my continuation buyers, and there's shorts in here, and we squeeze. Now, how far does it go? Let me know when you know. Now I have my longs. What happens here? I get my sellers. Now, if I get my sellers here and I have longs here and in here, what does that mean? My sellers are built in. They're sell stops. Boom, gap, down, sellers, right? And this is last Friday. And you'll see how this fits together. The end of the planet. Now, what happens on Monday? Gap. Where's the fuel? Isn't it these shorts in here that are going to need to cover? Buy stops are going to be above here, and the gap. So what are we doing? Now we're running over the sellers. Now we're taking out the weak shorts. Is everybody with me? What happens then if we're in a higher time frame bear market? I'm not saying it is. That's up to you. For me, it is, but hey, doesn't matter, does it? Let's not get too hung up. Let's follow what the participants do. Remember, what is your opinion worth? I'm going to say our opinions don't mean anything. It's our plans. So if I squeeze out the shorts, fill the gap, and my buyers are the buy stops that are above this swing and in the gap, then what can I do? I can sell it. And that's where we are. Now watch. Now what? Well, let's go one day further, maybe. Hold on. I got to grab the edge of this chart. This is Investor RT, by the way. It's my higher time frame software. It also exports levels into Bookmap. Very nice, very convenient. Now what do we do? Now this, so we go down, and what do? We come down, and let's look at the mechanics. I have shorts here. This is too high. Shorts in here. And I come down, and then what do? Look at the mechanics. Squeeze. And where's my stops? In here. So now yesterday, the plan for yesterday was a short squeeze, which we got. Now, as you guys know, and it's not that important, I was on the short side yesterday. You're saying, well, why would you get short when you're looking for a squeeze? Because the dominant side is the short side. So I tend to, and it doesn't matter to me. I can trade long, short, it doesn't matter. And because of the chop yesterday, I found that if I perceive that the buyers are weak buyers, in other words, who are the buyers? Is it new longs? This is the question for this astute group of traders. Or is it just shorts being squeezed? So I kind of look at this like I want the counter rotation so I can take continuation trades. So what I was doing yesterday, I was taking continuation shorts. Because why? The trend is down. Now let's come to today. Now here's another piece. I'm going to show you something else. Now I'm going to get just a little deeper into auction market theory. Our target yesterday was here. I can't spend time on this, but if you watch the other streams, you will see what this was important. This is a retail price that we left behind. In other words, it was too low, and I think it was in September of last year. I can't remember. It's not important. This is support. On the shorts yesterday, this was a target. And who knows, it could just as well go to zero, right? Once we got here and we bounced off it, it actually set off the short covering. But I was only doing was trading the rotations. Doesn't matter what I do, It's not about me. It's about you and a plan. Doesn't matter, right? So if this is too low, write that down, 1425. So now let's come back. There's a couple things you need to know. Where are we opening? And by the way, I got to show you some other targeting here. So write down 1466, 1425 was too low yesterday. Then what else do I have? I have 9150 as the next one below. Let's see if we got anything else out here worth mentioning. We have 6572-ish, and that's not really material. What's material is working these levels. So anyway, let's move on. And remember, if you have questions, post them. If I can't get to you, especially if you're in YouTube, use the link in the bottom of YouTube. Visit the TraderLab. You don't have to be a Bookmap subscriber currently, and you can participate. There's a lot going on in there. Data mining, support, vetting of structured trades that I've shared, and a lot more. Hold on one second. How we do it in YouTube? I'm not seeing anything in there. Because somebody just post the chat there, something in the chat. So let's move on. I am trying to move faster. So now here's our good friend Bookmap. So let's look at some stuff. Stuff, you know what stuff is, right? Let's put the story together. Let's look at something that most others don't even think about. What's this? Yesterday's high. What's over yesterday's high? Well, stops. Okay. Now let's look at the ETH, because this kind of sets up everything, I think, for today. I'm doing okay, thanks. Okay, guys, thanks for posting. If this is too high, and I tested in the ETH, then I got to turn around, watch, and look at where the ETH low is. Yesterday's low. So the ETH basically is in what? Balance. What is balance? You're going, what are you talking about? Well, let me show you. Now, the market has different conditions. If we think the higher time frame might be down, I'm going to step out on a limb and say I think it's down, then what do I want to do primarily? Two ways I can operate. I can wait for the squeezes to take the weak side out and then take continuation shorts in alignment with the higher time frame. I believe, from my experience, and I'm not someone who needs the action. I'm not here for activity. I'm really here for edge. So if I understand market mechanics, if the inventory gets lopsided, which means the shorts are in here, and I run out of sellers, then where's the buyers? All the shorts have buy stops, right? Well, there's your buyers. Yesterday, what did we do? We lit up the shorts. What happens if we squeeze the shorts, but it's not really buyers, it is short covering? Is that a different participant? Do you know the difference? Now, if we come down in time frame and rotations, once you understand market mechanics and just refer to the higher time frame, it's happening in all time frames. So intraday, the market rotates and we see rotations. Well, as day traders, we're trading rotations. You need to understand if the higher time frame is down, then maybe you want to just let the squeezes or the counter rotations happen and then continuation shorts. Is that logical? Or, here, I'll give you the or you're a counter trend trader and you have an edge aligning with the weak side. Now, if you do, that's your business. I'm just going to tell you about me, and I'm not saying this is great. I'm just saying what I do. I am detached, and I'm not doing this for a dopamine fix and to keep busy. I'm more strategic, so I only take shorts. So today it was shorts. I haven't taken a long. When I see what I perceive to be a long, it isn't a long. It's cover. In other words, trade management. Now, back to the condition of the market. This is called a naked volume point of control. Close your eyes. What it means is this is the fair price from yesterday, or the highest volume. This is auction market theory. So yesterday's high was too high. Yesterday's low was too low. And this right here, remember I showed you 14-ish, and I showed you in a higher time frame, that was the target for yesterday. So in the ETH, too low. ETH high, maybe too high. So I tested both sides of the range, and then the overnight volume point of control. So we have yesterday's high volume. Think shopping. If it's too high, you don't pay it when you go shopping. If it's on sale, you throw 10 in the cart. Right? So the market rotates. The high volume is the fair price. You buy your can of tuna, there's a retail price. Hey, you grumble, you throw it in the cart, and off you go. You have your tuna for the casserole. But you're not going to pay when it's too high, and you might buy when you perceive it's too low because it's a sale based on the current price. Now in the ETH, let's go down to the last auction. The overnight volume point of control is the same as this. In other words, high volume. This is like your retail price, or fair. So what do we know? Outside edge, fair. So I'm opening in a fair area. Let's go to our grid sheet. Now, And this is available in TraderLab. Remember, everything's in TraderLab. The only thing that's not in TraderLab might be you, and you might want to think about it. We are opening in yesterday's range in value. Now, what is this value? Value area high, and all of this is very much profilage, as I call it, profilage. Now, a lot of this you can learn. It's out in the interweb world, you know. There's tons of information now on this. I learned this market profile from the guy who created it, Peter Stottlemyre, and we didn't have volume back then. This was mid-1980s. We had time, so it was 30 minutes. But now we have volume, much better. So value areas where 70% of the volume took place, it's considered the outside edges of what's fair. And then retail, high volume. So there's like a bell curve if you want to think about it. That's what's called a distribution. Anyway, we open right here, so we're at a fair price. So if we know yesterday was a short squeeze, remember what we know. Now, we don't know anything else, but we know what might happen, right? We don't know what will happen. How do we know what will happen? Our plan tells us what will happen because it's telling us what we will do when the condition and the vetted trades line up. Our job is to sample the market, not avoid risk, because if you want to be a trader, the yield comes from accepting the risk. The difference is you are attached, and psychological, this need to be right, but to avoid pain. So you look for certainty. It doesn't work here. So instead, we have to reframe it to sampling the market, not right, wrong. The right, wrong is your plan, remember? So if I open here, nothing has changed. So going to my context grid sheet, it says I'm opening in yesterday's range and I'm opening in value. What does it mean? Context grid sheet. The market's in balance. What can we anticipate? Well, balance or rotational day. But what is the trend down? But in the developing time frame, two-sided trade. How do you put that together? Trend down, short squeeze yesterday, weak hands out, opening in range in value. We are in something called balance. What is balance? Balance means two-sided trade, rotational trade. What might you want to do? Get short. Where? Good question. Let's look. RTH open. So right here, I know there's potential for trouble. And I have to be very patient. I want to get short. Now, statistical probabilities. We're opening lower inside of yesterday's range. And you have to vet all these for yourself. These statistics are available for all of you in TraderLab, as well as templates for building trade plans and tons more. By the way, you come to TraderLab, be sure to watch my primer webinar. It's got about 36,000 views. You might want to find out what that's all about. It's about an hour long. Order a pizza and watch. So, opening lower in range, there is a 98%-ish probability to take out either the first hour's high or low. Taking out the ETH high or low, and you already know where those are, a 97% probability. Getting to the overnight volume point of control, which is there, about an 80%-ish probability. Getting to the ETH low, 69% probability. Getting to the previous point of control, same thing, which is not that important at the moment, 68%. Taking out the first hour's low, 62%. And the previous low, 53%. Now, statistics do not exist in a vacuum. This is where the thinking about mechanical, and I know when we're learning, we have to kind of think mechanically, but that's not what trading is. Trading is not mechanical. The first piece in trading, in my opinion, is something called context. And context is something you have to learn, which is what? Higher time frame, down, yesterday, throw the weak shorts out, which gives us the opportunity for continuation shorts. We want the shorts out to get short. Is that illogical? So let's look. Now, I'm going to show you structured trades. Now, everything I do here, you have to vet. There is no plug and play. I really have to apologize in advance. Otherwise, you would have found the plug and play that works and you'd be a consistently profitable trader. Everything we do has random winners. Write that down. It's not about the randomness as far as the winners. It's about edge. You have to separate. So what do I know? Here's what I know. My RTH open is here. My ETH mid is here. Value area high is an outside edge. Value area low is an outside edge. 15 is a biggie. All right? You wrote that down. Now let's go. RTH open. Remember, helmet on, no clue. Right? Trade plan. What's the plan? Two-sided trade. Let's see what it does. Now I'm looking for two-sided trade. RTH open. This is the fair price from yesterday, and this is the 80% probability right here. So this is called developing volume point of control. This yellow line, and I showed you the naked volume point of control, which is fixed at RTH close. Overnight volume point of control is fixed at ETH close. So we're right in a high volume area. High volume often suggests two sides. Okay, so we want to get short. How do we do that? Great question. Watch. So now I'm going into micro. Just focus. This is called the variable high volume node. Now I'm going to show you a process and methodology which I made up many years ago. I made it up for myself, and unfortunately it took years. So, you know, it doesn't matter what it took. It's just that, just like you, I studied everything, bought every book, went to seminars. There was no PC or internet, so, you know, information was kind of hard to come by, you know. And you read a book and you go, that sounds like a good idea, and they show you examples, and then you take it as truth. But it might not be true as far as edge. What is this? Now remember, I'm looking for two-sided trade, okay? So right here, and the opening swing high is there. So let's mark this thing. So when I see opening swing high imbalance, at least for me, I anticipate they're going to get picked. I call it a stop pick. In other words, these sellers, these guys, they're going to have their buy stops here. So the market can easily come up, take them out, and if it's only a short squeeze, remember how the market works. It goes down to go up, goes up to go down. So I'm looking based on the open for this to get taken out, and then I want to look outside for it to revert. It's called mean reversion. So I got to label this opening swing high, and this is a process. And again, process has nothing to do with prediction. It's like, I don't know. I always like to say I'm clueless. And it's not to depreciate myself. It's to remind myself that I have no idea, you know, what these participants will do. So what I'm doing is I'm anticipating behavior. I'm not predicting it. I anticipate the stops are here. So I'm anticipating they get taken out. Then my job would be to look. If I see absorption and it's only buy stops, just giving you the idea, I would then short it to come back here and then come out the bottom and go to 14 or 15. Because now that low from yesterday, right? So right here, this is a variable high volume node. Now, this is a short for me, typically, but because of balance, it's not qualified. So now, here's what I know, and I don't know until after the fact, so we have to get over it. Right here is resistance. Not qualified. This is often a short, but not in this condition. I see my sellers. Now let's look at how this works. If this is a retail price in developing time frame, and this is where the retail is, but the reason the market moves around like it does, it's a auction, and this is what auction market theory is. What's too high? Well, in the developing time frame, and there's no clock, I just want to stress, we'll call it a time frame, but the clock doesn't regulate this. So there's no like 5-minute whatever, you could do whatever you want. I threw the clock out the window. I don't use time other than open, high, low, close for RTH, things of that nature. That's it. Or the ETH. Otherwise, it's all participant and behavioral order flow. Okay? Anyway, so this is resistance. Buy stops are here, and this is where I'm looking to get short. So I'm looking for it to break high and then come back somewhere. Here's what it does. It breaks low. I'm okay with that. And I'm looking for, right here is resistance, you see? And I'm going, come on. You ever cheer? Doesn't always work. I break low. Now, right here, the teeth are chattering. And what else do I have? So I found maybe too high. No way to know. And now I have a new VPOC movement, VPOC migration. Again, I'm in micro now. So one of these days, I'm just thinking I should skip all this and just go right to real time. But all you're going to see is, if we don't have a trade, then we're all going to sit here. And that doesn't do you any good because I only trade when I have an edge. I'm not interested in being busy. I don't know. I have this idea that I want to trade for potential profit. This is now resistance. How do we read this? If this is the retail price, high volume, and it's too high, which I won't know till hindsight, let's get over it, and I shift down here, this is my new retail price, this is resistance. And when I bounce here, and I come under, right here I see absorption, and where did I go? Overnight volume point of control. That's why I ask you to write these things down. 80% probability. So if I got short here, this would be my scale. But I didn't. It was like, but there it is. So no short. And already right here, I'm feeling tension because I'm saying, well, that was my target for my scale. Now squeeze. Doesn't. Break low. New retail price. You see it? Break low. When this right here, when I come back, and of course my risk is the opening swing, I can short this. Very aggressive. I always tell developing traders, don't trade this thing, like this. Watch. What's this? What's this? Let me put a little line here. I want you to see this. Now, this is very micro, and it's advanced because you actually have to understand how the market works. This is what makes this advanced. I'm not using indicators as the line crosses over and, if it worked, I'd be doing it. I did it for years. So the buyers are here, and where's my price that's too high? Wasn't it there? So here's what I can do. I can sell this. I can sell this. Look where it is. Why? I'm not paying that. The store. This is shopping. New retail price. If I come up and test, I break low. I can sell this. I can sell this. And this is aggressive. And here's my resting liquidity. Let's see where it comes back now. Let's see. Oh. Support. Mid VWAP. What's here? Overnight volume point of control. I'm going to throw a little line over here. All these lines, I know. What is this? Do you know what this is? Hold on. It's this. I got to turn this stuff down. Where are we doing over here? Oh, we're coming to an outside edge again. Very interesting. So this is too high. Remember, wasn't it too low? You see my scale, which I didn't get the short up here, but I got my shorts here, and what was this, Tom? Support. You know the concept. Now, it's not mechanical. So in other words, I came above it here, but where's my resistance? Here. If I find too high and I get below where the buyers were here, and now this is where my resistance is, and this, and this, and this, what am I going to do? another short. Now, order flow. Let's go to order flow triggers. I'm going to jump around. I'd like to really get rolling here. Let's see. What is this? Tom, what are you doing? Good question. This is another trade in the TraderLab. This is a short there. Scale would be there. This is another short here. Iceberg. Absorption. Why would I sell this? Because these guys, these buyers, got thrown under the bus. What might they do if we rotate? They may cover, reverse, who knows, right? Now I get something called VPOC migration. Let's look at the concept. If we're migrating in micro up here, is this any different? Is it? Not for me. It's just time frame. Watch. So, short here, two here, and we're trying to go a couple places. Let me show you. Here, and this is where the buying came in yesterday. This 14.15 is support. So these shorts I'm taking, I'm trying to get here initially, okay? Because if I can get under here, I can lean against this for continuation short. So anyway, short here, get risk neutral. This is called mean reversion. Underline the term mean. And, just trying to go down. So now let's look. What do we know? Watch what we know. Not what will happen, what's happening. Because in trading, we can't know. So what do we know? We have a plan that's structured, and when you come to trading, and this is really where the work is, the job, you already know what you're going to do. If you have to say, what should I do? You don't have a plan. You should not put $1 at risk. Because then, unless, of course, it's entertainment, you're playing a video game, and you accept the reality that you will not have sustainability. Does that make sense? Does that offend you? Then TraderLab probably isn't for you. You should then go to someone who feeds your fantasy. TraderLab exists because, and I actually agreed to do TraderLab and create it, was I have, let's just say, I wish somebody would have helped me when I started in 1980. I spent so many years waking up in the same place, and I did deep dives beyond your imagination. Elliott Wave, Fibonacci, Gann. I don't even remember. I don't want to remember. I built trading systems, and we're talking years of work, and all of it I threw in the garbage. And it was very hard to let go of the things I believed. You see, you believe certain things, but what happens if your beliefs are not aligned with this business? Anyway, short, and then this is resistance. Watch the behavior. Watch the behavior. So I can sell that, and I have to deal with this. I have to have enough range. If I don't have range that qualifies, I can't take the short. Here is resistance. See the behavior? Now I get VPOC migration. Same process, guys. Same process. Watch. So what you're going to see me do every day in the stream is something called anchored inputs and process. In other words, I just do the same thing. And why do I do the same thing? Because I don't know what's going to happen. So I'm not in the business of knowing. I am in the business of alignment and already knowing what I will do if something happens. Here's key element right here. Now forget, I'm going down here. This is my target, this thing. I'm trying to go there. I don't know. Here's the thing about rotations. Let's come back to what we know. What's in this leg? What's this? Market does what? Goes down to go, I don't know, up? Why? Buy stops, buy stops, buy stops, buy stops, buy stops. That's my fuel. If the inventory, if I run out of sellers here, which nobody knows, then my buyers are built into this leg. Now let's turn it the other way around. If I get my buyers out and the trend is down, what might you want to do? And where's my stops, by the way? You see? Opening swing high. So this is where the teeth chatter. Let's watch. Variable high volume node. Do I have this in here? close, pretty close. Let me put it in. Or is it in? Close enough. I'm going to put it in here. I must be disciplined. This is what I do when I'm trading, because I don't want to forget these things, and things scroll off the screen. One of the rules I have for myself, especially in a balanced or two-sided trade, is to look left, because the market tends to go into the liquidity, which is stops. What do I know about this opening swing high? Buy stops, right? So what was my plan? If I had come up, I would have shorted it, remember? Well, what's going on over here? Let's take a look. What did I do? I come up here. Why didn't it do it over there? Random. What's this? Now, let's look. Outside edge. This is a sweep. This is a great tool in Bookmap I use. If I could give a hug to certain things, this is one of them. Now I have, what's this called? Think real estate. Location, 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 alignment, and now, watch. So I'm already stalking this trade, and I'm aware of where the stops are. So as I'm coming up, here's resting liquidity. Let me come back to this now. I got to put some of this back in here. Now, the thing with liquidity, as you guys might know, is that it's like stepping on a banana peel. Are they going to transact? Are they just there to fake us out and they're going to pull? There's always the question. So I don't have that answer. So that's random, right? So instead of operating in fear, I am operating in uncertainty, and I accept it. So instead of saying, what are they going to do? And I'm fearful, I'm always fearful. Now listen carefully. I am fearful because of uncertainty. I am fearful because I'm wired to seek certainty, but I'm in an environment where there is no certainty. How can I solve for that? I can't. So if I can't solve for it, then I'm out of luck. So this sets up a short. Now, so location, clueless, we'll see you later, sweep, trigger. Now right here, I get this trigger, and I got to tell you, it's like, and where am I trying to go? Here and there, okay? So this and 14, you see? So this is my short, and right here it runs away. So now, fear up here, FOMO over here. Everybody with me? Now, I want you to understand, this is what we, because of our wiring, experience emotionally. Fight, flight, fear, uncertainty, FOMO, right? And it's all based on primal wiring. And if you don't understand it, you should come to TraderLab, because most of us spend all our time on setups and all this stuff. It's not the problem. The problem is you, me, our emotional states. That'll take you out of the business. You only need one setup to build a business and do proof of concept. One. And most of us, because of FOMO, we don't even know that we make choices that are being driven by FOMO. When you want 5 or 10 setups, you're already in the FOMO world and you don't even know what it is. So what is this? Let's talk. Now, too high, what's this over here? Variable high volume node. If I find too high and I break below, now forget, this is resistance. If I break below the next level, it becomes resistance. Is this blowing your mind? And overnight volume, point of control, and under here again. All right. And I'm going to give you some more. This is an outside edge. Now, this is a little more advanced. This is auction market theory and the volume profile. Let's just talk about what's going on here. I'm not paying that. Remember the store. Oh, it's on sale. High volume. This is your retail price in the store. If it's too expensive and I leave it and I break below it, if I come back here This is called a low volume node. It's this, what was support, you know the concept, and I break it, can become resistance, and my outside edge is here. So when it breaks here and it tests this, and I'm trying to go here, by the way, and I come back here, I can sell it here. Now there's another place to sell it. This now is the new retail price. Just watch. I'm going to have to label it. Gosh. Now we're in here going on not quite a half hour so far. All right. And this is process. So I'm showing you process. I do the same thing every day. The same thing. Why? The market's random. Something's got to be anchored. When you watch the primer webinar, you're going to find out about anchored inputs, not variable inputs. Most of us go to the opposite extreme. More inputs, more indicators, more certainty. Right. It's absolutely the opposite of what works, in my opinion and experience. You know, I had everything but the kitchen sink built into a system that I optimized. Walk forward testing and all that. Break low, retail price. Here's the possibilities. Boom, bang, or bang, bang. If it's bang, bang, isn't this the same as that, the same as that? So if I break, and that's resistance, and this now is support, and I come back up, and I see absorption and a trigger, I can sell that, and subject to, I can sell that, I can sell that. Just giving you some thoughts. And where am I trying to go? You do remember, right? Come on. Where is it? Here. There. So this was the target coming down, okay? Now, let's keep going. Watch. Target, right? Is everybody tracking? Target. Now, yesterday's low, ETH low. Come on back to our statistics. We opened lower inside of yesterday's range. 97% probability to take out ETH higher low. Take a wild guess. Which one we going for? How about the previous higher low? 87% probability. Do you think we're going to take out yesterday's high at the moment? Maybe not. Would you be going for yesterday's low? 87%. Would you be going for the ETH low? 97%. Would you be going for the IB low? First hour's low? 98%. What do you think? Think. What's this? So I have this, I have this. And here's what else I have. So I got this. Anyway, that was the cover. Now, what do I anticipate? Let's come back to market mechanics. Buy stops are here. There they are. Thanks for playing. They get a coupon to the buffet. Buy stops in here. Squeeze Ethereum. Take the weak shorts out. We did the same thing yesterday in a higher time frame. Is everybody following me? It's the same. The same. Too high. Shorts in here. Target. Then what? So what is the condition of the market? Let's go. Trend down. Shorts primarily, unless you're a counter trend trader. Me, not so much, not interested. In this condition, I just use the counter rotations, which are squeezes for repositioning with the trend. Till it changes, right? So let's look. Now, here, remember this is important right here, but the probabilities are 98% here, etc. So there's more, as they say. I'm going to show you some other stuff. If you have questions and you're in YouTube, post them, okay? And I'll tell you, if you find this interesting and you don't have a sustainable process with a statistical edge, you might want to visit TraderLab while it's still available to you. I've been doing TraderLab, I guess, going on about 4 years or so, something like that, maybe going on the fifth, I don't remember. And I'm a full-time trader, so when I'm doing this, I'm not trading, so that kind of presents some challenges for me. So this is resistance. Now, support, resistance, support, resistance. You see the behavior? Now, what's this? Break high. Do you know where I might put my stop? And this is not a recommendation. Up here. Why? Support becomes what? Resistance. So when I break here, I can sell this. I put my stop here. Now you guys, I understand, are going to put your stop there, right? And why would you do that? Think very carefully. Why? Answer in your mind right now why you would put your stop there. Why? This is so important. Why would you put your stop there? Now you already know, don't you? Where's that decision coming from? It is so important that you learn about yourself. What drives decisions? Is the answer, I don't want to lose more than I have to? Is that your answer? Be honest with yourself and be honest with me. If you put your stop there, that's the lunatic under the hood, the risk-adverse individual who wants to, quote, not feel as pain. We are wired to avoid pain. So we are making decisions not based on the business. We're making decisions based on emotional needs, primal wiring. Is there a saber-toothed tiger? I want to avoid pain. I need to, right? If you burn your hand on a stove, are you going to be putting your hand on a hot stove? No, pain. So you've been trained. And the lunatic under the hood, who I call Hyde, Jekyll and Hyde, Hyde's the lunatic, all emotions, not logic, not rationalization, just behavior, puts their stops there. Now, here's the problem with this. You and how many other thousands of traders put their stops right there? The way I look at this is, I'm not putting my stop there. Here's why. If this is resistance and everybody on the planet, let's assume it's everybody or most retail traders because they fail. Write this down, by the way. Think like a retail trader. Don't act like one. As soon as you want to put your stop there, you're thinking like everybody else. Is that a recipe for sustainability? It's a question. Think about it. Write it down. Don't let this go in. My mother used to say to me, in one ear and out the other. I don't know what was the message in that bottle. But if you hear this and you don't take advantage of it and ponder it, you're not going to change your outcome if it's not positive. And forget the random winners. So let's look at this. Risk-adverse traders are going to put their stops there. Me, out here. Why? Because this has happened to me so many times, getting stopped out, that I can't count. And not only that, why would I put my stop with the rest of the crowd? There's liquidity here. Look at this. The stops are coming out. Notice what's taking the other side of the liquidity. Icebergs. 544 icebergs here. They're going, the guys who sold this, the sellers, are going, oh, really? Have some more. And they're using the liquidity, the stops here, to take the other side. They're passive. They need market orders to sell. So, risk-adverse retail traders have stops here. They become market orders. These guys who sold here are just selling some more. Does this make sense? We could spend months, obviously, discussing market mechanics. You also have to look at yourself and look at the decisions you make. They are not based on best practice, most likely. They're based on fear and FOMO because it's a constant condition. So you need to learn about that part of yourself because that's the most important element. I believe anyone who comes to TraderLab can learn how to trade if they do the work. Doesn't mean you'll succeed, because the work is not so much on learning to trade, it's learning to manage yourself. So, support. resistance, 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 break low, trigger, order flow, trigger. This break, bang is the same as break, bang. Same. Watch. And what was our target? ETH low, 98%. Let me move on. Now, what's this? I got my ETH low. All right. Statistic. Lovely. And I come down here. Now let's watch. Now, here's the other thing to be aware of. Obviously, the trend is down in a higher time frame. In intraday time frame, we are trading this stuff, rotations, if you're a day trader. And you will determine what time frame or rotation you operate in. I tend to just, and I'm not saying this is a good idea, I just, sell this and manage here. Let me show you. Here. So if I take this, I know this. If I take this, I know this. Stop is going to be up there. If I break here, I know this. I can go there. If I break here, I know this. Here. Now I'm saying I know it. I know what it can do. But here's the other part. I don't know what it's going to do, you see? So I know what and where. This is the beauty of the auction and order flow. What I don't know is if, when, and where, right? And why would I not know that in spite of 47 years of trading? Because it's always random, you see. So support becomes resistance. Support, if we break low, if I break high, I got resistance here. Watch. So too low, too high, okay? And shorts. Where do I come? Watch. So the way I work this is I just manage my trades. And I always go, that's interesting, So let's look. So let's remember, this was our outside edge. Break here. This can be a short. Break under here. This can be a short. Where am I putting my stop? Over here, right? If I'm not short, I can sell this here against this coming back here or not. What happens over here? What is this, Tom? I don't know. Whoop. So you see what I'm doing, right? I think you get the idea, maybe. Anyway, this is there. This is resistance. This is VPOC migration. This is a big deal. That says this is too high. I'm going to mark it. Variable high volume node. Remember, I made all this stuff up. Who knew? The problem, at least for me, was this process I share. I can't even tell you how many years, but years, So, and I share it in TraderLab. And it's not saying, and you have to vet it. Here's the deal. There's no plug and play. Because if there was a plug and play, you'd go to that one chat room or one, quote, influencer with the only thing you need, and you'd have that printing press or an ATM. This is resistance. You see it? Now, I get VPOC migration. Let's just keep following a process. So remember, I'm just following I call this the yellow brick road, Wizard of Oz. Follow the yellow brick road. So what this is telling me, let's look at language again. This is what the auction is about, that the high volume, which is our retail price, our shopping experience, is moving down. That saying is, I'm not paying that if it's too high. So what happens? If I come here and I got resistance here, I didn't move this thing out, but you know where it is. So support, resistance, resistance, break low, resistance, say it, break low, VPOC migration. Now this is very important what happens right here. Remember how it works. This is too high. I'm not paying that. I am not going to pay it, Tom. Forget it. All right. New retail price. Here's the possibilities. Too high. Remember what happened up higher. I bounce off these things. Okay. So it's this. Lower to zero. And this, by the way, is our target down below. I forgot to tell you this. 91.5. Let me show you this. Forgot all about it. I'm not a good multitasker. Where is, 91.5 here. This, remember this, 91.5. Target. Okay, that's the target. For me, this is where, and you can see it's right there. For me, that is where I'm trying to go. And I have no clue. It's like, here, let's come back. So you see where that level came from in Investor RT, and here it is right here. And my liquidity comes in here. So for me, this drops down. This was my target right here. And it is only, we're not even open in an hour. All of these are structured trades. You can learn these. I'm not saying they're any good. I'm just saying. Now let's come back to our what? Watch. Is this making sense, guys? How you doing in YouTube? I mean, does this look like madness or is it organized? What happened here? My resistance, my sellers, trigger, short, target, new retail price, going to zero, cross that says too low, watch, resistance, continuation to where? Right to there. Is it still too low? If it is, this is called mean reversion. So what mean reversion is rotational trading. In other words, balance inside of direction. So if the higher time frame is down, today is down, counter rotations are opportunities for continuation trades. Is that making sense? Short to there. That's the reversion. This is called the mean. So if this price is too high, right here, I'm not paying that. New retail price. If, don't forget, target. This here is the same as that. This is left over from last time we were here. Maybe somebody in TraderLab can post that. I can't scroll back at the moment. Let me know where that level came from, the date. And the reason this is how the auction works. In all time frames, it is a pricing mechanism. Remember the purpose of the market. What's too high, what's too low, we'll see you later. So, and we don't know where that is, but as traders, what we're doing is we're attempting to align with a directional side if there is a direction. There's going to be conditions and times in the market where it's just floating back and forth, and that's a different condition. So there are conditions inside of conditions. So if you're only looking at the short side, which, that's all I'm going to do, then I'm just waiting for squeezes. How does the market work? Market goes down to go up. There, I went up. Who's getting squeezed? These guys. What happens if I sell here? There's going to be buy stops there. There's going to be buy stops there. Don't you know that? What's down here? Is this a strong low? What does that look like to you? Do you see your V bottom or anything in here? I don't know. I don't. But this is what I know. So I know this is very important. And if I can get under here and check it, not a recommendation, I can sell it. So we'll talk about that one. Watch. Short to there. Resistance here or there, up to you. Me, if I sell this, I'm up here or even up here. Why? Same reason I wouldn't put my stop with everybody else. Why would I do that? This was really good. I really like this one. Watch. This setup is short. I'm going to show it to you. This. When this happened, and I guess POTUS was, pieces going to break out. This looked news to me. I saw this and it was like my jaw fell on the floor. But, watch. But what do I know? First of all, I don't know, except I trade the auction. So I look out here and I'm going, where might this thing come? Let's come over here. What is this? This is called the distribution, and and this is the fair price. Let's go back to shopping. If I fell out here, I'm not paying that, and I leave it. And this was that 15, which was a key target. Look at the pieces. And this was where the low was from yesterday, and the target, remember the 15. What happens if I come back and my liquidity comes in? I have an outside edge. This is the big kahuna. I can sell it. Let's look. And this is posted in TraderLab. Now, by the way, posting means nothing. It means anything can happen. Who knows? Right? Location. This is a trigger. This is a short. Where do we go? Too low. You see this? So what you have here is, let's come back over here. So support, resistance, break high. This is a short to there. It's called mean reversion, and you're trying to come out, either come out the bottom, and we have a 98 there. Let me just give it to you. Hold on a second. To take out the first hour's high or low is 98%. This is the first hour's low, and this is support. So I have 98% probability, but I also know about this thing, and I have to be very, very, very cautious, because I might only check this and then come back, and I don't know the answer to that. So let's look. Anyway, this is a short. Scale is there or there, but there. Get risk off. That, because the trend's down, 98% probability support. Okay, so the target on this trade would be mean reversion. This is what this is called, outside in trading, reversion. This is the mean. So in a downtrend, if you think it's down, for me, there's only one type of trade, outside in. So I'm not going to sell it here. I got to get this. Why? Because there's buy stops in here. Do I want to join these guys? No. Now, right here, I have no idea about this, right? I'm just sitting here just like everybody else with my jaw on the floor. And as far as I know, it's just going to go to zero, except this. Does anybody have the date? I asked the TraderLab, guys, where did this level, this 91 half-ish, come from? Can somebody scroll back and take a look? This is important. So this is too low, break high. Don't forget, 98% probability at 9:30, this thing is locked in. So this is the low of the first hour, 98% probability to get under here, and this is my key level and target. Watch. What's this? Anyway, I don't have anything now. Watch. Now, where do we come? What was that key level? Now, I don't know. I haven't seen any of this, so I'm just as clueless as everybody else. Watch. Location, and now we're trying to come outside for reversion. It's still the same as this. Let's just see what happens. See? Okay? Questions? Guys, if you're interested, September, okay, that, all right, thanks. September 2nd was this is where this came from, September 2nd, and that's the last time we were here, 2025. That's why it's a target, because what happened on September 2nd? This was the retail price. Same as this, except it was left behind. What does the market do? It's a shopping experience. Maybe this is too high. I don't know. This was too low yesterday. And notice where I come back. Do you see something consistent? Not predictive, consistent. So if this was support yesterday for the low of the day, might it be resistance today? Might it have alignment with order flow? And it happens to be the mid, my least favorite trade, but it doesn't matter. I'm not trading because the mid is here. I'm trading because of order flow in the auction. The mid is not significant. For me, I get it. Don't worry about it. I'm not selling the VWAP. Why? That's what retail traders do. They don't understand market mechanics. They see a line on a chart. And we've all done it. You draw your trend line and you start saying, it's going to do this. Well, it's not going to do anything. It's going to do whatever it does. So we have to anticipate behavior. I anticipate. I don't predict. So what do I know? I anticipate that the VWAPers right there are going to sell because they're mechanical. They do not understand market mechanics, and they become buyers when they get stopped out. They're trapped. I know that since I'm trading the auction, that my outside is out here. It's not here. It's there. Okay? So I know here we accelerated away. You see it? This was support. This becomes resistance. Now, I don't know when it starts coming across the range where it's going to go. I sit here with my jaw on the floor like you do. What's the big deal? Now, here's another thing. Suppose I'm sitting here. I'm in my Barca lounger. Now, this is a trigger. Let me show it to you. See this? Right here. Liquidity. Location. This liquidity is from all the way down here where we had other behavior. Stops are here. I'm going, what's that? I truly am. Jaw falls on the floor. It's kind of what happens. Break high. Now, what is this, Tom? Why aren't you getting long? Well, because the trend's down. And what is this? I see the green delta. What is it? See that? If you can't, it's a stop, an iceberg detector. What is happening here? Buy stops. Thanks for playing. You get a coupon to the buffet. And now right here is where my buyers were and the absorption was here. I break high. This now is support. That is support. So I see the buyers, sellers, buyers, sellers. Get above the sellers, support. Buyers, there's absorption, going to the moon. When this happens here, that's absorption. I can see it. Now I'm below the buyers. This is a trigger. You can isolate these and study them in TraderLab. I come back and check. What happens? The icebergs are going, give me some lovin'. Short, TraderLab to there. Okay, I'm just showing you structure. And this is called mean reversion. So the only thing I do, and I've shared in TraderLab, is if the trend is down, what do? Sell the darn thing. Where do you do it? If it's at a fair price, you can't sell it here. You need it to come outside. What's over here? Oh, there was a sweep here too. That says counter rotation. Forgot. Remember I was saying sweeps, love them. They're not mechanical. It's like, oh, I see a sweep. Antenna goes up. Watch. Let's try this again. You're going to like this. I think. I do. I like it a lot. I like it because this is not complicated. It really isn't. You can learn this. Here's what it is. It's random. So that's what's going to drive you nuts. Trying to be certain, trying to avoid risk, and you can't. So this is a sweep. There's the buyers. There they are. There's my reaction. Where's my resistance? It's there and there, right? So I can be doing this. But this is support. See it? I get this thing. Jaw hits the floor, but I get a trigger. I can sell it, and where am I going? There, and out the bottom. 98% probability, don't forget to take this thing out. Who knows? Watch. Where's resistance? No precision, just is what it is. See, where am I going to sell it? Me? Here, there's my liquidity, there's my liquidity, there's my liquidity, there's my liquidity. Notice the alignment here. Notice the alignment there. I can sell this. And where am I going, Tom? Mean reversion, right there. And then wherever. Is everybody tracking? Give me a like if you're in YouTube and you like this. If you find this interesting, you can learn this. Now, it's not plug and play. Sorry. There's none of this. The only one thing you need, sorry. I think you've had enough smoke blown in your face or wherever to know better. Trader Groundhog Day. Work hard, take other people's ideas, plug it in, and somehow think you're going to have a sustainable business. Sorry. Even what I do is you can learn what I do, but you're going to have to isolate specific trades. And I share these trades and other traders in TraderLab. Remember, it takes a community. Data mining, what I've done, the TraderLab's not about me. I'm just, call me a guide. I guide traders and I bring them back I try to protect traders from themselves, from the lunatic, because 95% of success in this business, or 90%, let's say, probably, is you learning about yourself and the primal behavior that causes you to make decisions that you're not even conscious of. You see, what happens is we all have the same emotional response as I do. I feel FOMO, I feel fear because of uncertainty. I'm wired for it. I can't stop it. I spent years trying to squash these emotions so I could be like Spock. I literally, Spock, what Spock is, right? No emotions. Okay. So I wanted to be completely void of emotion and just be analytical. And I'm not talking I did it for a few months. I tried for years to try to squeeze that part out of myself so I could just be calm and just do what I was supposed to do. I couldn't do it. So, and I tried behavior modification. I'm talking paint. I figured it worked on the dog. It might work on me. It didn't work. So instead, I had to learn more about myself and begin to recognize the impulse. The impulse is chemically induced, okay? So hormones and fight and flight, and it's all cortisol, be on alert, be an alert in a protection state at all times. We're always evaluating risk, whether you know it or not. We are always looking ahead, looking for certainty and predictability. It's just part of our wiring as humans. The species survived because we made sure there wasn't a saber-toothed tiger behind the rock. Well, we're doing the same thing. When you're sitting here and you have uncertainty, right here you have fear. Your brain or your primal wiring cannot differentiate between this and the saber-toothed tiger. It's a primal response. So now when I have uncertainty, which I have, I just recognize it and it's trying to protect me. So I've made peace with myself, but I also had to learn about what generated responses. So when I feel it, I now recognize it and I don't respond to it. I go up, I'm feeling FOMO. Let me relax a little bit, take a deep breath. I know, in other words, what I have to say to myself is, oh, I missed that, or gee, I didn't get a trigger, or whatever it is. And now it's down 20 points. FOMO, anxiety, anger, frustration, emotion. So I feel it and I go, mumble a few words, and then I go, okay, I know there's going to be another trade. It's a bus. I'm just going to wait for the next bus. Take a deep breath. Be patient. Another trade will come. And if it doesn't come, it's okay too, because your job's to follow your plan. It's not a random rotation. There's going to be thousands of trades in a career. Thousands. What is one trade? It's inconsequential to the ability to sustain yourself in the business. But we're like those dogs that chase a squirrel, or if you're in New York City, pigeons with oil slicks around their neck, one or the other, and it's all instinctual. And the reason we respond to FOMO is, if in a primal situation, if the food escapes you, you might starve if you don't get that food back to the cave, you see? So that wiring for survival, which is avoid the saber-toothed tiger, seek certainty, and then chase the food that's running away from you, you see? So those two primal stimulus, if you will, or responses are part of us. Okay, so now you have to learn about yourself and anticipate that, because if you respond, and I have to tell you, in the moment, you won't recognize it. You'll already be, oh, it's getting away, click. You haven't interrupted it. Is that you? I'm just telling you, it was me and everybody else who's ever done this business. So don't worry about it. Here's the thing. Learn about yourself, fix it. It's part of the business. It's your emotional state is not broken. It's that you're not changing your behavior in a random environment. So remember what right and wrong is in this business. It's not the outcome of any trade. It's the plan. Following your plan. You have a losing day and you followed your plan. Guess what? You're a winner. Do you know why? Because it has edge, and over a random distribution of outcomes, assuming you execute this plan and manage your emotions, just like the casinos, you're going to extract the dollars from the other participants. And just like the casinos, they are sampling. When they deal the cards and the games have edge, it's a sample. It's not a right-wrong. If the dealer changed the game, that would be wrong. But if the gamblers win, that's okay, because all the dealer is doing when they deal the cards is extracting an edge with a random distribution of outcomes. We have to change our perception in how we interact or experience the outcomes of these random events. So it's not the right-wrong isn't, gee, I was wrong on a trade. Well, I'm going to say, when someone says I was wrong, I'm going to say, did you follow your plan? And they go, yes. I'm going to say, well, you weren't wrong. That's the path to success. It's kind of counterintuitive, don't you think? Oh, I was wrong. I took a stop. Well, the only way you could be wrong is if you made the trade up, you FOMO'd in, you skipped the trade, you moved your stop, and you didn't follow your plan. Then that's wrong, wrong, wrong. You're on your way out of business. Is that logical? Is this too severe for you? Is this, you know why? I can't sugarcoat the business. I'm here to share what it is, and then you get to decide what you're going to do about it. You know, if you're a profitable, consistent trader, you have nothing to do. Come to TraderLab, help us get better. It's the leverage of the community, and we have a lot of great traders in TraderLab, and also developing traders. Now, what's the difference between a, quote, great trader or a profitable trader and a developing trader? How about this? We're all developing traders. I'm a developing trader. Every day I'm looking at this and I'm going, does that have an edge? Let me put a few months into this thing. I'm curious. And so many times in my experience, in my development, I would see patterns and I would see winning trades. See a pattern, see a winning trade. I'm going to say, gee, that looks pretty good. And then I'd start trading it. And I'd have winning trades. But let me ask you this. Suppose, since we know randomness is all part of this, suppose you're doing a trade and it has random winners. But if you knew statistically it would lose, no matter what you did with it, in spite of the random winners, would you keep trading it? Or are you like most retail traders? You see a pattern, you just keep trading it because of the random winners. That's Trader Groundhog Day. You're on your way out of business and you don't know it. What's your experience? What does it tell you? One of the other aspects of Trader Groundhog Day is I also looked at this in many ways like tuition. Remember we went to school, maybe, hopefully you all went to school, and let's assume there was tuition to go to school. And if you didn't pass the class, what would you do? You'd have to repeat it. And hopefully that didn't happen too often to too many, right? But let's say you kept repeating the class and you're paying over and over and over. If you don't have edge, you're going to have random winners and you're going to keep repeating the class. At some point, you're going to go, I've had enough of this. I don't want to keep paying and not changing my outcome. Let me learn from my experience. You're making an investment in yourself and the potential to have a career in this business. But if you keep waking up in Trader Groundhog Day, you're repeating the class, trying to fix. And here's the thing you're trying to fix. You're trying to fix what might be a defective process. You cannot fix something that's defective. You have to change what you do. And a lot of that has to do with your beliefs. You believe, like most of us, that if you work hard and you don't have edge and you have random winners, that you can fix it, right? Well, if the process is defective, you can't fix it. Trader Groundhog Day, repeating the class. So we don't have unlimited assets and we don't have unlimited time. At some point, you're going to have to really say, wait a minute, this isn't working. Why? Do you know why? It has nothing to do with your persistence to try to fix it if it's defective. How can you fix a defective process? You can't. So that's why I'm offering you an invitation to the TraderLab. Because at some point, the light bulb is going to go off and you're going to say, what am I missing? What you might be missing is understanding the business, because you're probably not going to really understand the business unless you come to a community that's focused on business and not hyperbola or fantasy. It's a tough business, guys. And let me tell you what's tough about it. Not learning how to trade. What's tough about this business is your emotional state and what you believe it actually is. It's not what you think it is. Where was our target? Remember? Where's our short? Remember? Where's our targets? Well, they're there, and then this is support. That's just what it is. Trade management, you do what. See, I don't talk about trade management too much because it's time frame specific. For me, and it's not a recommendation, this is kind of what I do. I just go bang, bang, this, to here, and then whatever, and then time frame. So if I'm suspecting, now this might be the low of the day, you say. That part I can't tell you. Yesterday, I mentioned that this might be the low of the day, but I can't predict anything. So, I'm clueless. So, clueless, but not ignorant. Okay. Are you guys following? Hero's asking me at 11:21 a.m. It must be 10:21, I guess. You were anticipating the mid? Well, we did take the mid. We got above the mid here. So you were anticipating mid shorts to be taken out, but didn't happen. Well, it did happen. Oh, this? Oh, all right. I'm laying against this and that. See, I was leaning here. Now, I wasn't able to take this, but I'm telling you, this is a trade I would take all day. And I have a trigger. Now, it didn't do it, right? But there's my trigger. What do I do about this? Well, if my plan says it must come up here or there, then I don't have a trade. So that's correct. You follow your plan. Subject to your understanding of market mechanics, you might take this trade. I would take it. And here's what else I would take. A stop. See, I'm all right with that. Other than, emotional responses. Who likes that? I don't like paying bills. But I'm only sampling. You see, it's not right, wrong. It's plan. If your plan says it's got to pop and drop, that's good. You follow your plan. For me, I like it to pop and drop. If I get a trigger, this is a trigger, then I see this, which is related to that. You see how all this comes together? If I sell this, I'm going here with my stop. Now that might be too big for some of you guys. That's up to you. If it doesn't fit your risk reward, you don't have a trade. You can, as soon as it breaks away here, you can come over here. Again, you have to vet this, all right? So for me, I don't have a problem with this. I'd short it there. And then it's trade management, and whatever it does, it does. Final questions, guys. I'm out of time. Remember, TraderLab's open to all you guys. Don't forget, there are 60 PDFs of structured trades that you can get your hands on, but you have to vet them and reverse engineer them. I'm not a vendor. There's no, quote, trading course. All there is a community of like-minded traders who've come together to leverage their collective experience. There's a library of webinars. There's the TraderLab community. There's a document section all about trade plans and understanding market mechanics. There's a lot of information, and there's no plug and play. This is about the business of trading. If that's what you're interested in and you're visiting in YouTube, if you haven't done it, click the link down there. You do need to confirm your Discord username. Make sure you're not a spamulator, and I would like to meet you there in the TraderLab. Maybe we can help you move your business opportunity forward and maybe create sustainability. Thanks so much, guys. Be sure to review this stream and the ones from the last 2 days so you can see how pieces fit together. Please do that. And also, please leave a like on the way out. Appreciate you guys. Have a great weekend, and I look forward to seeing you again in the TraderLab.